Hi, everyone. So today I just want to talk to you about how diabetic or being a diabetic would impact your life insurance premiums. As a lot of the people that I speak to, I won't exaggerate, about half the people that come across looking for life insurance online typically have the chronic conditions such as diabetes, and the impact of which I don't think it's fully understood by a lot of people. So just want to delve into that. So when we're talking about life insurance rates, there's obviously several factors that go into determining what your premium will be. So first is going to be your age. So the life insurance companies dictate your premium by the average life expectancy, right? So if you are younger, let's say in your like 20s or 30s, you are assumed that you would be able to live for many more years into the average life expectancy, which is in the 80s now, mid 80s for a lot of Canadians, versus someone who is shopping around for the life insurance in their 70s. They barely have like 10, 20 years left in the eyes of the insurance company, that is, right? So you will be paying hefty premium at that age versus if you were to start early. So that's number one. Second is your health conditions and your medical history. So if you've had any sort of major events in the past, like if you've suffered from heart attack, bypass surgery, or if you had cancer in the past, stroke, all these main illnesses, just to name a few, if you've had them in the past, and also how recent you've had it, that's also going to be a main factor in the insurance company looking at you, at a higher risk, coupled with the age, of course. And then there's the third and fourth and fifth. There's a lot. So if you're a smoker, for example, obviously you'll be paying a higher rate because smokers tends to have a higher risk of being exposed to certain diseases that will reduce your life expectancy and so forth. A couple of other things they look at is your occupation, like what you do for a living, and of course your family life history as well. So they look at everything, right? So but just coming back to the diabetics, I think, or having diabetes, I think it's something that most people feel, right? So my dad is diabetic, so they feel that if they are on medication, it's well controlled. They exercise, they control their diet, they feel fine, and they just have to take a small pill every day, once in a while. But they don't realize why that would be considered a higher risk. So today, what I'll do is I want to just go ahead and take you guys to a sample underwriting, I guess, chart, if you will, or a guideline. So as you know, I'm a broker. We work with all the major insurance companies in Canada. A lot of these companies will have different view or different opinion about a certain medical conditions or profile, but it won't vary that significantly, if you know what I mean. So if a company, for example, like Manulife, considers someone with cancer history being a high risk, pretty much everyone else will also feel the same way. So there might be a degree as to what type of cancer or how long you've had it, and all that goes into play that determines what your actual risk classifications are. But you could safely assume that most of these companies look at you in a very similar way. So I'm just going to use like an example here. Let's say, for example, I don't know, we'll use Canada Life. So if I just type this in Google, underline guiding, so accelerated, that maybe that's not the one. Let's try another company. Let's do Industrial Alliance. Sorry, what's this? Okay, that's not helping. Industrial Alliance underwriting guideline. All right, there you go. So field underwriting guide for representative. So this is basically, it's not the the be all end all, the guide, like a definitive guide that that you should follow, but this is a pretty accurate depiction of what a person or what a potential applicant will be faced when they file an application. So for example, they have a list of all the illnesses here. We're gonna skip through. So you can see here they look at everything. So medical risk, anemia, and then the following, all of the asthma, cancer. We're looking for diabetes. There you go. So diabetes. So it breaks down into two, right? So diabetes, there's type 1 and type 2. I believe most people will be type 2. Type 1 is obviously quite rare, but type 1 is also considered a much higher risk as well. So it gives you like a brief description of what the condition is, like it requires an insulin injections. So underwriting focus, it breaks down as to what the underwriting will do. So they'll look at all of these factors, and then the requirement would be that they have to obtain your family doctor's report when you file the application, and then the possible action, right? So it says, depending on the age of the insured, duration and degree of control, 50% to decline. So 50% is the minimum that they will decline for the life insurance application. If you're considering a critical illness insurance application with them, if you have type 1 diabetes, they will decline you outright. So you don't even have that option, right? So moving on to type 2 here. Type 2, obviously, less severe form of diabetes. It's not, insulin dependent. You may still be actually, insulin dependent as well, but so they look at multiple things. They look at the same thing in terms of the focus, but the requirements would be a little bit different because once again, this is seen as a lesser severe form of diabetes. So for the amount you see here, anything that is insulin treatment. So they'll be looking at all of this, right? So this is that will be requesting the doctor's report in case if you meet these criteria. That's what it means. And if the underwriting action. So this is the thing. So best case scenario, possibility of a standard rate for someone age 50 to 69. So if you are younger than that, so if you're 49 or younger, that means that standard rate may not be available. Standard rate is pretty much the best rate a person can actually qualify for. Someone with perfect health without any sort of medical conditions or major history, they could get away with qualifying for standard rate. So this is otherwise what's mostly advertised in the marketplace is a standard rate. Now there are a degree of better rates out there, which is very rare, called a preferred rating, but we're not going to talk about that right now because as someone with diabetes, you're not going to get that rate for sure. But it's saying in this company, at least with the Industrial Alliance, if you are between this age, who receive the regular follow-ups and treated with oral medications, follow a diet that has no complications. So this is the best case scenario. I would say, based on my experience, I've been doing this now. I've been in the industry now 16 years or over, and I have seen a very, very few cases out of tens of thousands of applicants that I've already handled and dealt with myself that have gone approved as a standard for someone with diabetes. So otherwise, this is very much more common and is in line with the industry norm. Okay, so 75% increase to decline, right? So this is very common. So it's not uncommon to see actually the insurance company coming back with 100% or 150% increased rate on top of the standard rate. So for example, like if you are like a 50-year-old male, you're looking for like a $250,000 coverage. Let's say you wanted to shop around for like a 10-year term. I don't know the exact quote off my head, but let's say, just for the sake of argument, if the premium is $100 a month, then what that means is now they're going to charge you 75% more at a minimum. So $75, so $175, or to a decline. So it could be anywhere upward of 75%, from 75%, sorry, to all the way up to, 150, 200, 250, 300, 400%. So it has a lot to do with, if you have any other health concerns or if the diabetes is so severe and that your blood sugar level is out of control. So they'll be looking at that, but you can see that this is the best case scenario. Um, so the reason why I want to talk more about the diabetes is, aside from every other conditions out there is because with diabetes, it seems to be a lot more prevalent, and people just have a hard time understanding why the diabetes is seen as a higher risk. So I just want to show you this directly from the guideline of these insurance companies to see what you can expect. Of course, the best thing that a client can do if you are diabetic and you're looking for the best rates, it is very important, vitally important for you to work with a broker that have wide access to all the insurance companies, and also the broker who understand the market, who understands the underwriting process behind how these insurance companies sees you as a potential risk, thereby being able to offer you the insurance companies that will look at you in the most favorable way. So I can't stress that enough because if you understand anything about the broker industry, most brokers out there, they only have, 5, 6, 7 different companies they work with or represent. They don't have access to all the markets. So we at Familia Life, we have access to everyone, even the companies that we are not yet contracted with. If a clients are looking for them, we are going to get the contract. So it's basically on demand if we don't have the contract, right? So that's not that's not an issue. But more importantly, through the experience of me doing this for over a decade now, I can confidently tell you that with all of the clients that speak with me that are diabetic, they're oftentimes able to get better than what the average market rates are. So just a key thing to remember is to once again deal with a competent broker who have a lot of experience, who also have a high or a wide network of carriers they represent. But yeah, that's it for today, guys. If you have any other questions, do feel free to get in touch with us. I'll be shooting another video shortly about any other topic. So stay tuned and we'll take it from there.